about where the proceeds of this will go. Of course, touches on a little bit to go to the Sovereign Wealth Fund, but largely Infrastructure Fund. Here is why.
The National Infrastructure Fund, the discussion, there is the feeling that we really don't have to have law as in an act to create a National Infrastructure Fund. You can create it through regulations, and we can budget through the budgetary process, because funds can be created by the National Assembly. Okay. So we are working on the details of that. And by the way, this process is not going to be concluded in 2 months, 3 months. It will take a while. Okay. Before that happens, we will have had in place a National Infrastructure Fund. Those which are commercially viable need to be taken off our budget. And we need to link the private sector, capital, and the public infrastructure. Now, that linkage, you know, all public infrastructure projects have some elements of risk. Mm-hmm. You need to de-risk that risk on public investment infrastructure to be more attractive to private investment, to crowd in the private sector capital into the public infrastructure projects. That you can do by setting up a fund. And this fund, National Infrastructure Fund, mm-hmm. if well executed, which we will make sure is properly executed, will have seed capital, which therefore then would be available to attract private investments and blend the capital and invest in these infrastructure projects which are commercially viable and which can repay, like toll roads, mm-hmm. like energy sector and the rest. Mm-hmm. Now, this is going to be an institution. And this institution will be run as a commercial entity. Yep. And with the business mind. Presently, you have all state departments, and there is conflicting. You will find several state departments are involved in the execution of projects. Okay, that is not very healthy in terms of business mindset. Mm-hmm. You cannot attract private investment in an area with too much bureaucracy.
Well, that's the CS making quite a case about why we need the National Infrastructure Fund. And when I asked him the question about where that information is referring to is for Kenyans to engage, he said it will come. Odhiambo, what should we think about? Because he makes a case why we need to shift to a fund that will have the mandate to even invite bids, come up with projects, design and everything, sort of taking away the responsibility currently of the procuring entities, he called them contracting entities, to now be the infrastructure fund as an institution. How does that look like moving forward?
Well, first of all, let's agree that we are in agreement with the government of Kenya that these infrastructure projects need to be expedited. Mm. The road that is on the news right now needs to be built. The dams need to be built. The energy projects need to be up and running. Now, the infrastructure fund sounds attractive. What they are saying is that the money from the sale of Safaricom will go in there. Maybe we sell a little bit of KCB as well. We put the money there, we sell. So there's a lot of selling that's going to happen so that then now we can have money in the infrastructure fund. His hope is after they have sold and they have some seed money, let's say $1 trillion or $500 billion, then the private institutional investors like my brother Churchill will look at that fund as very attractive because that fund will be investing and getting money. So Churchill will now bring his investment there, and then someone else from Britam, and then someone else from Old Mutual, and then everyone will sort of just bring money.
I don't like how you don't think Sheila will invest.
I'm watching it. I don't think I'm going to bring my 2 cents.
My apologies. Yes. Sheila will invest. Yeah, I mean, in paper it sounds quite attractive. Yeah. There are 2 problems. One, the pension funds in the country as of right now, pension funds, is around 2.5 trillion. The money is held by our asset managers. All the assets they are holding is around 689 billion. Mm-hmm. In other words, as it is right now, even the money they are hoping to get from the private sector is around 3 trillion. Eh? So your 5 trillion yao hata bado hatujafika. In other words, if you pull that funds together, and that is assuming we get all the money being held by asset managers, all the money being held by the pension fund, which is impractical. In principle, what I'm trying to allude to is, as it is where we are, that one is impractical. The second problem that arises is, okay, fair enough. Some analyst is seated somewhere in Upper Hill looking at the prospectus that the government has developed about the infrastructure fund. And the question in his mind is, where are these guys investing that I cannot invest directly in? And the infrastructure fund is investing in infrastructure, building roads, building dams, the kind of investment that need 20, 30 years for you to recoup the money. Traditionally, those private sector analysts want something they can go into and exit between 5 to 7 years. I mean, 5 years in the private sector is long term. So now when you tell him that you're investing and you will get your money after 18 years, that's when now you start recouping money. This is money that is being held in trust for some people who might be retiring next year or the year after. It becomes then unattractive. So there are two things. One, the infrastructure fund as it is right now, developed or conceptualized by His Excellency the President and Waziri, is impractical. But secondly, it is also unattractive to the people they are targeting with this fund, which is the private sector. Because no one would want to put their money there for 18, 20 years as it is. And so then either someone, and perhaps this is again where I would agree with Ndindi, either someone is intentionally incompetent, like they are refusing to see what is evident, or there is ill motive somewhere.
Yet, as we progress into this, I wanted us to listen to what more the Cabinet Secretary said, that this is meant to cure, because currently we have different routes to procuring for projects. Watch him.
Otherwise, if you give it to state departments, then the bureaucracies kick in. You can see the difficulties we have with PPPs.
Yes.
To conclude and close one PPP project, it takes years and years. That is not very healthy in an environment where investors are coming in with their money and they want to make returns. So we want to create a system which is more efficient, a body that will now negotiate on behalf of government, design projects, implement projects, go ahead and source for funds by also indicating here we are with, say, 20% of investment in this project. Then we get some Gituku, we get another institutional investor to bring in projects, to bring in financing or funding for the project in blended finance kind of arrangement.
Now, Sheila, PPP, he regrets that it's so bureaucratic. I remember once upon a time there was Adani, privately initiated a proposal to expand the Jomo Kenyatta International Airport, and they had signed a few deals in the energy sector with Ketraco. Now, if bureaucracy is inconvenient, so you centralize that through an infrastructure fund, but there's still the question of transparency, accountability, good governance, rule of law. What do you do to that? Because the Constitution remains supreme.
I think it's incredible that government says bureaucracy is inconvenient when government is in charge of, setting up the bureaucracy. How about you streamline and get rid of bureaucracy? PPPs do not have to be that way. We can borrow from many places around the world where PPPs are not, very bureaucratic. Now, maybe we are defining bureaucracy differently. If bureaucracy is taking time to be transparent and accountable to Kenyans, then yes, let's keep it bureaucratic, because if Kenyans are paying for it, Kenyans have to see it. We have to see the fine print. Again, I think it's a bit misleading to term PPPs generally as bureaucratic processes. They exist for a reason. I mean, anytime a private entity is either proposing or being sought out to come in and take over, national assets, yes, it does take time. It's not the same as me just, calling, a friend of mine and saying, hey, let's sit together and I'll give you, you can take over the airport for X amount of years or whatever national asset. So again, I would urge, the CS to work on the bureaucratic aspect. At the end of the day, if it seems like an inconvenience, then we can work on it. Sam, I think bottom line is very simple. You want to set up a fund. I spent last night actually going through this draft proposal of this fund. The problem we have in Kenya is never a lack of good ideas. It seems very, very, very ambitious. Then you come back to the reality that this is a fund. In this fund, you want to attract investors. In this fund, you also want to attract development partners. There's development partners that will come in and give you, support, some of it in form of grants, some of it in forms of loans. The only issue is, anytime you invite anyone else to the table, there's conditionalities that come with it. Mm-hmm. If I am a private investor, I have my own conditionalities. And it is true, the average period that private investors typically look at is anywhere between 3 to 7 years. That's what they would look at in terms of being able to cash out. The projects that we're discussing today are not ones where in 3 to 5 years you'll be able to say, yes, we built this, the Mao Road, and now we can see that we're able to recoup out of it. That is not the case. We are talking about strategic projects that nationally will see Kenya move on to the next level. So what we need to be having a conversation today about is this fund. Who came up with the idea of this fund? Who are you exactly? You talk about investors. Who are these investors? Because one thing is clear. Different investors will look at different things. Development partners who have traditionally worked on a lot of infrastructure projects, actually, with the different member states or different countries. Those might be able to relax a little bit and say, hey, we have time. Other components within the fund are very, very ambitious. There's this Urithi fund that is modeling the Norway fund. This is part of this fund. And the minute I saw it, I thought, oh my God, we have diamonds somewhere and we don't know. So maybe our future in Kenya is very, very secure. Mm-hmm. Again, if you look at the Norway fund, and if they're trying to model the Norway fund, and how it is being run, and then you look at how we're issuing, even licensing for mining here, then you'd be a bit, there's a day and night situation going on. So the long and the short of the story is you cannot complain about a matter that you are in charge of in terms of government. The rule of law will be supreme, and then any inconveniences in between is up to you to propose and say, listen, we need to have a middle ground where we do need investment. These infrastructure projects, we need to get them done. So there's no question about this here, just to be very clear. They need to get done. The question is, at what cost? And the other question is, this concern that we're expressing here is not unfounded. We have seen several projects that we are paying for today that have gone in and made no sense at all, but we always have to carry the burden of having to pay them back. Mm-hmm. So yes, we have to ask very pertinent questions. Like I said before, if Kenyans are paying for it, Kenyans will have to be entitled to see it. And some transparency in a lot of this transaction, it is not a favor that Kenyans are asking for. No, it is our constitutional right, because these are national assets.
Churchill, so if PPPs, public-private partnerships, are inconvenient, the government has actually succeeded in executing them. Talk of the expressway, at the dancing cost of from 60s to 70s, now I don't know where we are. CRBC building Rironi Mau Summit, we were never called for public participation, or rather, the Kenyan public wasn't invited to come and make comments. But it was unveiled. It was launched the other day by the president. Talanta Stadium. Can you talk about it? Look at the costs. Very difficult questions for different officials at the very start, including the PS for Sports at that time, who could not answer what the cost was supposed to be. Of course, now there's a totally different model of financing that has also caused a lot of confusion. Whether is it 44 billion shillings? Is it 145 billion shillings? I mean, if we are centralizing all this into the infrastructure fund, what do you think are the safeguards that we must put in place to ensure that even as you take away from the eye of the public, the value for money and protecting Kenyans is at the core of it?
Yeah, thanks for that. Before I go there, let me chime in some of what my panelists had already touched on. the aspect about transparency, you see, we've been playing clips from one side of the party. This is now the government of Kenya, Minister of Finance, Mbadi, some of the politicians in Kenya. But also there's another aspect to add to that. There's Vodacom. They had what you call an investor call with investors, just trying to walk people through this particular transaction. And so on the dividends, so essentially you're looking at future dividends of 55.7 billion, which we are getting upfront. So essentially, that present value. So if I borrow 100 shillings, for instance, from Sheila at a rate of 10%, so today, so she gives me 100 shillings and then I pay her 110. So in actual sense is 110 that she'll get in 1 year's time for a price of 100. So that's similar what's at play here. But instead of the 10%, here we are, from that investor call, it was around 16.5% that was used as a discount. So we've been hearing numbers 5%, 10%, but what came from Vodacom actually was 16.5%. Upwards of 18%, so that's one. In terms of the return of investments, from the government perspective, if you look at the budget documents, it talks about 10% return on investments on public expenditure. Is that the case if you look at some of these big ticket public expenditure that we've had in Kenya? That's not the case. So that is the benchmark, that even all these investments that you want to get into, at least there's that return of 10% on the investment. The other aspects is around where will the proceeds go to. So if you look at the National Infrastructure Fund, there are actually two funds that we're talking about. There's National Infrastructure Fund, and then we have the Sovereign Wealth Fund. On the National Infrastructure Fund, it's actually modeled along the likes of South Africa has a National Infrastructure Fund. But this National Infrastructure Fund for South Africa, it's under Development Bank of South Africa. So Development Bank of South Africa is like it's a long-term lender. So a subset of that is where there's a National Infrastructure Fund. And because of that, we have some of the investors coming in on board. We've been hearing talks about investors coming in, private sector investors coming in to be able to increase this National Infrastructure Fund. But if we go back, take a step back, and look at the Kenya Kwanza manifesto, they actually spoke of putting up a National Infrastructure Fund funded from proceeds of privatization. So that you can now give them for everything that Kenya Kwanza government has done, you can now give them, at least they have made good in terms of this proposal. That was in the Kenya Kwanza manifesto. So the National Infrastructure Fund, we still haven't seen the details, but from the look and feel of it is like it will be mirrored around what we have in South Africa, the way that they're leveraging private sector players, as Odhiambo mentioned, even people from the capital markets, the pension funds, just to put, even the multilateral development partners. President Ruto was in the US last week, and he mentioned speaking with the International Finance Corporation. This is a private sector arm of the World Bank, which from that tweet, it's like they are also interested in putting their money into there. We have the Sovereign Wealth Fund, and I think across the continent, not just South Africa, we also have the likes of Ghana. For instance, right now with the new president that came in power last year in December, they have this, what you call the Go Push, a big push agenda, basically driving infrastructure. And part of how they are going to proceed that, how they are going to fund that big push agenda in the Ghanaian, it seems like even what you are following with the Kenya Sovereign Wealth Fund. But unlike Ghana, which have oil imports, they have vibrant oil sector, they have also gold, which the proceeds from those can be deposited into the Sovereign Wealth Fund. Kenya, we are now kind of aspirational. We have the oil fields up north, and it was just sometime last month that we had the Minister of Energy putting up for public participation the Lokichar field development plan, even for people to be able to see that. But it seems like proceeds of that from the oil and also the rare earth, whether it's there or the gold in Kakamega, will now go there. But also we are getting like, we are also putting proceeds of privatization that needs to get into this fund, Sovereign Wealth Fund. But now, look at Section 54 of the Privatization Act, which speaks that all the proceeds from privatization shall be deposited in the consolidated fund. So we are still struggling to see how you can move from consolidated fund to any of these funds. Think about it. If you have National Social Security Fund, which is a fund that has been set up from an act of parliament, we don't get monies being moved from consolidated fund to this particular fund. So that speaks of either we need to tweak whatever within the Privatization Act to be able to ensure that also other funds can now be able to accommodate proceeds from privatization. Arguably, you can say that, okay, Safaricom, is it really privatization? Like, if you think about this transaction, it's not like Kenya Pipeline Company, which is purely privatization, but for this one is actually one shareholder, one big shareholder, or one big shareholder buying another big shareholder. So is it really privatization? So probably the government might get away from that, saying that, oh, okay, this is not kind of privatization as you think about it here. So on to PPPs, you mentioned a number of things. So we have the Mau Summit, at least that's a big ticket one, 175 billion Kenya shillings. We also have securitization of the Talanta. You spoke about the figures. So the actual figures is around 44 billion in terms of the monies that was raised from this bond. The 102 or 100 plus billion that is coming from that is now the interest that's supposed to be paid from over and above the principal. So it's coming to close to 100 and something billion from that. So the
146.
There are different numbers being thrown around here. So from the
I think he's doing the math from what he said.
So the issue is now on the and also now the vulnerabilities. So the government is saying that all this is now to be able to not get into the debt route or to overtax Kenyans. And then the question is, okay, if for argument's sake we say that the government is right that okay, we are not adding the debt. We want to grow for some reason as we get this big ticket infrastructural developments up and running. It somehow grows our GDP. Go back to first term of Uhuru Ruto government, where there was that ramping up of public expenditure, but through debt. So this time round, we're still having them, but not through the normal debt. Implications that we think about. But ultimately, even if you're not getting into the debt, you're not getting debt to fund these projects, ultimately, because you are looking at, say, on the case of securitization, this future receivables from these funds that we have, be it the road maintenance levy fund for the sake of the road sector, for the sports fund for the stadium that is being built. So in a way, if there's a default event, as we think about, say, for the case of Ghana, they also had securitization, two securitization programs.
Right.
But when they defaulted, in as much as they were not considered debt, ultimately also those had to be restructured. So those are the contingent liabilities that underpinning all this. There's a government that is sort of giving a backstop to that. So we can't run away from that reality, but that probably is kicking the can down the road, because it's like the impression that I'm getting is that we are doing all these things in a pretty much short time, but now the headache will be for the long term, probably for the next government that may come, I don't know, next 2 years or 7 years or from that point in time. So that's a contingent liability. And even if I had CS Mbadi in your interview said that government exists in perpetuity, but ultimately may not be the same people who will be tackling it 20 years down the line. There'll be another set of players that will be there. So probably will it be a headache for them, or it may be a smooth sailing for them? I think that's...
But obviously a headache for Kenyans through it all, regardless of who is elected. There's a point I wanted you to clarify, then I can hear from Odhiambo here. On the question of dividends worth 55.7 billion shillings being received today at 40.2 billion, the actual costs of this, because the Cabinet Secretary says it's a 5.6% annualized rate.
Yeah.
What should Kenyans use to analyze those figures?
The number of ways that you can think about it. One had already been alluded to is the government receives close to 16.8 billion in the current calendar year. That was comprising of interim dividend and also the final dividend. So collectively, they got 16.8 billion from the stake of 35% shareholding. So that means that the first 55.7 billion that the government should ideally be receiving from the dividends in its, if this sells through, and then it has 20%. So there are dividends that will accrue from that. So the first 55.7 billion, government has forfeited to receive at that point that is supposed to get. So in lieu of that, they are getting it all in advance, but there is still a cost to that. There's a cost element. From the numbers we got, it was 16.5% cost in terms of, as you discount these future cash flows, what is that discount rate? So it's around 16.5%, upwards of 18%. And it's like from that particular call is for the first 3 years. So, and we are looking at a government dividends whereby they are looking at 55.7 billion that they are meant to get in the next 3 years. So what does that mean in terms of the potential of Safaricom? It seems like as it relinquishes its it's not even the right, from 35% to 20%, and Vodafone Kenya grows from 40% to 55%. It has at least as a higher say control, in as much as the public, this sessional paper, which we still haven't seen, says that it will retain the management intact. It will not lead to employees losing their jobs, at least for the next 3 years, based on what we've seen so far. But essentially, what is coming out is that Vodacom having a bigger say, it will now be able to drive the business quite efficiently. So even the government is foreseeing that the numbers that Sheila walked us through previously, like 15%, 15 billion this year, 17 billion, 7 billion. So it will get even more with a smaller shareholding. Yeah. So it's like now implicitly, Vodacom will now drive this business more efficiently because it has a bigger controlling stake. So that is what's not being said. Okay. But that said, I think in terms of the dividends, we are forfeiting, the government rather is forfeiting that the next 3 years, but getting it upfront. So it goes about the government. They are getting 40 billion right now. They need to invest it in such a way that it's neutral if you start comparing it, that the next 3 years, if it puts it in quite good use, it now be able to make sense. The other thing about that, infrastructure. We've been talking about infrastructure, and this is the push by the government. We have what you call infrastructure bonds that are being issued by the government in terms of the bonds that they issue. We have never seen the proceeds where this infrastructure are being deposited. Previously, the prospectors for the infrastructure bonds, they could just give us like a broad brush, getting it into roads, into water, and into energy projects. But right now, the last number of years, we've never seen even that admission. So it's just it's a blank check. Okay. So back to the infrastructure funds, we need to see it being set up, we need to see it being deployed appropriately, and we also need to see the projects that will now be able to yield this return so that this transaction pretty much makes sense.
Okay, right. Odhiambo, as we start to wind down, you look at what the government has done the past few, is it weeks or months, a serious shift to the management of the economy from what you knew. And more often than not, you're finding that the government is pronouncing itself and everyone else has to catch up. How do you ensure that the government is able to move with the people? Because the president, is it surprised the National Assembly, or rather surprised Parliament during that that statement, State of the Nation address on the floor of the House, talking about the first world ambitions, the 4 key priorities that the country now has. Yet these are thoughts that are built or made within the walls of cabinet and other meeting places for the government. How do you make sure that whatever is being conceived has the involvement of the people and a buy-in for especially the key stakeholders?
Well, the short answer to that is public participation. But allow me to take it back and say, maybe make a few comments, because you've said we are winding up, so this might be my last time. Cabinet Secretary says that this is not privatization, that this is merely divestiture, whatever they call it. But it is still public resources. And we expect that even if the law is satisfied that it is not privatization, as Churchill has alluded to it, but follow the law in spirit, ensure that there is proper public participation in there. In terms of now moving with the people, I'm not sure how to pick this up, because it's not just this infrastructure. It's also in terms of borrowing. It's also in terms of the laws that are being put in place. We've been here with the finance bill before, and then later on financial amendments came from behind. I don't think this administration is keen on listening to Kenyans. We've done public participation. I remember there's a time we were kept waiting for about 14 hours just to make submissions. And then after you've made submissions, you don't see anywhere where those submissions feature. So then you wonder, is public participation really effective? We do not have a law that anchors public participation and gives guidelines on the same. I don't agree with Waziri that you do not need a law to put these funds in place. I think there we differ significantly, because in the absence of the law, then the thing is open to abuse and malpractice. And so for me, now gathering my thoughts and concluding them, public participation is the best way to go. Let's anchor the infrastructure fund and the sovereign wealth funds in law, and make sure that as many Kenyans as possible participate in that law, so that then they are aware that this is what is happening and they are agreeable to it. As it is right now, it's just blurry. And the excuse that the deal will take a long while before then you put the laws in place, that's just an excuse. I think we can still have the law in place before then we can commence this conversation, so that then Kenyans are comfortable that by the time because you see, he wants me to give, they are inviting my comments in the newspaper. So he wants me to give comments on this, but which is another way of just approving. It's, I am assenting that, yes, this is worth considering, and so I should give my comments. But there is no guideline, there's no law in place that has put it. So that, give me the law, let me comment on the law first. And then now after that, let's talk about the fund. You do not put it the other way around. Let me conclude it at that.
Okay. All right, Sheila. Your comments about the Sovereign Wealth Fund, because we've been talking about two different funds. That is the National Infrastructure Fund, which the Cabinet Secretary, like Ramogi said here, says may not require an act of Parliament, because the PFM Act allows Parliament to create funds. But also you remember the conversation about Affordable Housing Fund, that the courts found that we needed a legal framework. The other fund we've been talking about is the Sovereign Wealth Fund. At the moment, still at the draft stage. And like I said earlier on, the Cabinet Secretary says it is with the Attorney General. And on that question of should we have proceeds of privatization going to the Sovereign Wealth Fund, as the draft is now, there's no provision of such kind of resources coming in, but the CS says they're going to amend the law. Well, you're amending a law that does not exist in the first place, perhaps saying about the draft. What have you seen that requires the attention of the people in the Sovereign Wealth Fund?
I think the first is a few things. I started off by looking at the management of the fund. First, I'm not sure how the funds are going to be, put into that particular fund, because the law is not quite clear which proceeds we can or cannot put in there. But the second is also just the overall management of the fund. I think we were looking at the draft around maybe from page 24, where it highlights, simple things like there will be a board that will manage this fund. And if you look at how whoever will be put to manage, to sit in that board, it was just ringing red flags for me everywhere. There's not enough. I can see a case where conveniently, you'll have the right person sitting there who can approve whatever needs to be approved. We need better transparency. What is not clear right now is you're setting up this fund. Like I told you, Urithi, for example, which was part of the sovereign fund, is trying to model the Norwegian fund. Norwegian fund now, this is the biggest fund, I think, globally now, because it's looking at the oil proceeds. Now, you look at the Norwegian fund and I went through how the Norwegian fund is set up and the aspiration behind the Norwegian fund. And it's always one of those things where, like, the dream looks really good, but today, if we can't even get our act together on how we're issuing licenses for mining and minerals and oils, what is the purpose exactly of this fund? It seems very vague. There's not enough regulation, not enough oversight, not enough governance structures that have been put in place. And more than anything else, I think I would like to agree with what my panelist here was saying. Sam, at the end of this equation, it boils down to something extremely simple. We keep kicking the can down the road, just like you said. We are not addressing the elephant in the room. We have debt. So as much as we want to sell everything, if we don't address how we are going to tackle the debt issue so that we can go back to having a budget that prioritizes development, then we're going to be in trouble regardless. If we don't talk about how we are going to curb corruption and wasteful spending, then we're going to have an issue. If we cannot talk about the fact that in 2024, after the Gen Z protest, we had a budget that allocated only 4 billion to State House, and then supplementary budgets later, we had 12 billion, then we are wasting time. Right. If we're not going to talk about the Auditor General's most recent report saying that, she cannot account for 320 billion, then we are wasting time. Right. If we cannot find the 60-something million that disappeared from eCitizen, then we are wasting time. We must attack these issues concurrently. That's how we have to deal with it. Nobody is disputing the fact that we need development, we need infrastructure, but we have to be responsible, Sam. For every shilling we are wasting today is a shilling that we are robbing in the future of a Kenyan. So you have a child now, I'm from Migori, you have a child now in Migori County who's busy going through school expecting that when they finish school, they'll have this big, bright future ahead of it. But then they will get there and realize we sold it out, we auctioned it out a long time ago and maybe use it responsibly. So again, transparency, it is a right that we have as Kenyans. You have to be transparent, you have to explain, and don't just do public participation because you want to tick it off the box. Make sure you get the buy-in of Kenyans. Make sure you explain to them the vision. Make sure you explain to them the execution and the strategy of how all of these things will work. That is all that we are calling for, so that we can make a fair assessment of whether it makes sense or not. Okay. But if we do not address the issue of debt today and how we're going to deal with it, and all we are saying is that we just want to continue privatizing and selling things, that strategically I do not agree with.
Indeed. And of course, there is so much to still talk about. Looking at the feedback that is coming to us, including CS John Buddy, who wants to have a say about the question of dividends and how the advance dividends were arrived at, the cost of that. We are trying to get in touch with him. As we do, let us take a look at the feedback that has come to use. And this is on X Space. And MC Rumaz is saying something is fishy about the controversial sale of Safaricom shares to Vodacom. Why the undervaluation? It seems there's a push to offload public assets through a price, raising real questions about who stands to benefit behind the scenes. Frank Orinde is saying the talk of selling Safaricom stake touches our data security, mobile money ecosystem, and a core part of our economy. Any ownership shift must be transparent and protect Kenya's strategic interests. As citizens deserve clarity before such decisions are made. And Babu Michael is saying the move by the Kenya Kwanza government to sell parastatals from Kenya Pipeline Corporation to now government shares in Safaricom may be of good move, but The hurry and procedural processes are very suspicious. Public participation must be conducted on this. And like I told you, there's an invitation in the paper that I'll go through again. Remy Butia, Kenya's move to establish a sovereign wealth fund is a visionary step towards long-term economic resilience. It's not just about saving resource revenue, it's about investing in future generations and critical infrastructure. That's what Kenyans are saying excuse me, this morning.